In this video, traders, we're going to look at the anatomy of a blow-off top. Stay tuned. Hey traders, a very warm welcome to you, and investors. This applies to investors as well. So we are trading a market, we're trading from the long side, or we're looking for a short opportunity in the market, and we're waiting for the end of a trend. End of a trend very often is finished with a blow off top. What is a blow off top? Otherwise known as an exhaustion move, a climax, all sorts of things like that, but we know what we're looking for. It's that aggressive final move that just really is the last of the people who have to get in the trade, have to get in the stock, have to get in the commodity, have to get in the crypto, whatever it is, they're all aboard, and that's it. It's the last exhaustion, urgency of buyers, then that's it. That signifies the end of the move, and you often get a significant retracement. Now, do you always get a complete reversal of the trend? No, but what you do is you often get a very decent, hefty pullback that you don't want to be in if you're long, for one, and you might want to be in to capture if you're looking for a short trade to fade this extensive trend move. Okay, so some of the things we look for a blow-off top, and then afterwards, if we've got some time, we'll look at some ways that we can actually trade these blow-off tops. Right, number one, a sharp increase in candle range. That's the easiest, most common thing to look at. So let's say you're looking at a daily chart from a swing trading perspective, candle, 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 and then you have that last final hefty range. It doesn't necessarily mean it's going to close at the high, but you might have a big wick to the upside. You might have a nice like engulfing candle or something. The point is the candle range, high to low or bar, whatever you're using, whatever your preference is going to be way, way bigger than any of the ranges all the way up. And that is just signifying that, hey, everyone has just piled in all aboard to this thing, and it's just given a way more excitement than usual. That's a really good indicator. If you see that at the end of a trend, you've got a really long, strong trend, and you see that, start taking some heed to that signal that potentially this thing could reverse. All right, number two, fresh significant highs. Obviously, well, not obviously, but generally speaking, a better blow-off top signal is when you are into complete fresh territory. Of course, blow-off tops can happen when, let's say you're in a 10-year cycle and now we've come off the low and we are, we've been pushing very, very strongly for 2 or 3 years and we have a blow-off top there. That's still maybe tradable, but it's nowhere near what it should be when you get to the fresh significant highs, all-time highs, fresh territory, never been there before. That's better because that's creating much more of euphoria around it, much more kind of participation. Shorts are getting absolutely hammered. Bulls think it's the next best thing. It creates a buzz around it. It's fresh, everything's good, it's new highs. Everyone's kind of predicting ridiculous rises. So that also helps with the blow-off top signal. So looking for fresh significant highs as opposed to coming back into maybe a range. Number three, much higher than usual volume. This is something that, if you're watching charts, you're often going to see, if I get a big range, you're probably going to get big volume as well. They normally go hand in hand. It's very rare to see a big range without big volume, unless something unusual has caused like a very small spike intraday and it's just messed up the daily chart, something like that. Most of the time, if you've got a big range, you're going to get big volume. So they will go hand in hand, but it helps to look. If you see that, you're going to see something like 2, 3, 4, maybe even 5 times the volume in some cases that you would normally get intraday. How do you measure that? You're either going to use a volume and kind of an average on your volume, some sort of indicator that gives you a number based on twice as volume and maybe shades of the bar a different color. You know the score, or you can just use your eyeball. I'm always a fan of using my eyeball because I can kind of filter stuff out quite good or quite effectively by looking at the chart. And don't forget, guys, when you're looking for these blow-off tops, you're probably already going to have, a reasonably small basket of instruments you're watching. You're not just going to be scanning every single thing because there's a few criteria you need to see, like it's going to be in fresh highs, it's going to be running on quite aggressively, quite a distance away from the moving average, etc., etc., etc. Which brings me quite nicely to number four, extreme oscillator readings. You will have extreme oscillator readings like your stochastics, like your RSI, your CCI, all those bad boys are going to be extreme. And I don't just mean on a daily, because a daily overbought isn't that exciting, happens very, very often. It's going to be on the really high time frames, like your monthlies, your weeklies, that kind of stuff. Those kind of charts are going to be well overbought. They've going to be overbought for a long, long time. So really extreme, and have stayed extreme for multiple times. Then you start getting these big ranges. Then you start getting this volume at fresh highs with extreme readings. This is where you start to want to get interested if you're on the short side, and you definitely want to be interested in covering the position or closing the position if you're already long. Okay, and the final thing is, which is generally not me till people talk about this, but I find this very, very effective depending on what you're trading, of course. Lots of media, news, attention. Look at the social exposure in a second. So a daily chart, this would be as opposed to your intraday stuff. Lots of media and news. So we can think back to cryptos, and cryptos, loads are in the news and stuff. Some stocks get really good news exposure, specifically financial media and financial news, talking about how they're the next biggest thing, how every single hedge fund owns it, and they're great and they can't do no wrong, and and they've changed their name, and all this kind of stuff that we hear and goes on. But one of the things that isn't talked about so often is kind of a bit of a secret, if you like to frame it as that, is the social exposure. So if you're watching social media, you know, Twitter, maybe not so much Instagram, but it's Twitter, stock tweets, all those kind of financial aspects of social media, you will see a lot of flow coming through, like a speed up of flow in the chatter around this specific market as we get to highs. And that's indicating you've got participation from retail. You're indicating with the big range, you've got participation from perhaps bigger hedge funds and institutions. You seeing you've got fresh significant highs, that's giving you a tick in the box, much more volume, again, participation. It's all kind of, every single clue you have is that people are involved in this and people are getting excited by it. You will start seeing people saying things like, this thing's going to this, I've made so much money on it. There's that bullish nonsense that comes through. It's not guarded, it's not cautious talk. It's not like, hey, I think this is going higher, I'm going to come out of here. It's not analyzing it straight, it's emotional flow. And you can start to see emotional social posting going on. And if you combine it with all that stuff, you've probably got yourself a blow off top, which can give yourself a decent shorting opportunity. And very quickly, guys, final thing, it's a pretty self-explanatory thing, but if we do have this blow off top here, the way you want to trade it is, if you're trading intraday, obviously that's great, but what you can do is, as soon as you get that close, you get that blow off top marker candle. Let's say this is your candle number one, you get the blow off top that ticks all the ranges. The obvious one is the next day on the open, you're selling short or you're closing, and your stop is going to be above that high. You might get stopped out, but at least if you think how far this has come, your risk reward ratio is going to be kind of 5 to 1, 10 to 1, really good risk reward kind of play. All right, guys, that's the anatomy of a blow off top. Hope you liked it. See you next one. Take care. Bye bye.